Welcome to a very special episode of Learning Insights where we'll be talking about MSMEs and how do we look at them as a credit profile. Real growth factors for any economy are the MSMEs. They are the ones who are resilient and provide a lot of employment. That's why there is a renewed focus on the MSMEs and how their growth story can be further enhanced by providing them the credit they need. About 70% of businesses in India and about 90% of the businesses across Southeast Asia are MSMEs. And everywhere we see there is a lot of interest from lenders on how to fund these MSMEs. This is Rahul. I'm a co-founder of AllCloud. And MSMEs are a subject that are very close to our hearts. With respect to MSMEs credit assessment, I think parameterization and standardization of these profiles into one is a definite no-no because each business is different and has to be looked at from that lens. Traditionally, whenever you lend to a business, there have been certain data sets, standardized financial statements that are looked at to understand the credit, liquidity, the repaying capability of the business, and how the business is going to perform in the next 5-7 years, and then create a credit model around it. Plus again, there has been always backed by a collateral. So it's more or less de-risking the loan by adding a collateral. The business data is just taken as a supporting document. But in the cases of MSMEs, business data is the key. But these are non-collateral loans, which means that they are not backed by an asset. In that case, how do you do the credit assessment? Is data available? I would say fairly. But is that enough to understand the business of MSMEs? Definitely no. Every MSME is working in a different domain. So if a lender wants to create an expertise in MSME lending, they have to choose their domain. And once they choose the domains that they want to work with, they have to create models, understand the business, and then fund. When you're funding to MSMEs, you're not really funding the proprietor or the owner of the business. You're funding the business along with the proprietor. So it's very important to understand both the profiles. The credit profile of the borrower and a history of the credit profile of the borrower can definitely be found out from different sources. But what about the business? So you need to create models to understand the income, financial viability, growth story, and deployment of funds. And you need to keep doing it again and again. Even after disbursement is done and the loan is progressing, there has to be a tap on how the funds are being utilized. What's the growth story like? After providing of these funds, how has the utilization been? So all of this put together will create a very efficient model. But let's get back to credit assessment. MSMEs have different sales cycle. MSMEs have different realization cycles. But can you put it into a simple standardized calculator and come out with the viability? Definitely not. For every business kind, so if you're running a restaurant, you need to look at restaurant as a business model and then create credit parameters. If you're looking at artisans or you're looking at dairy as a domain to lend, then you need to go to the intricacy. You need to get your hands dirty to be able to succeed in MSME lending. That's why a domain-based credit assessment is vital to the success of MSME lenders. MSME lending needs a phygital approach. It can't be all digital, it can't be all physical, because you can't scale if it's physical, and you can't go deep in the subject if it's just going to be digital, because you need to meet the borrower to do a holistic credit assessment. Technology will play a very vital role in MSME lending. It's probably digitization of the records and then digitalization of the processes that is required. So you collect data from the borrower, digitize it and put it into different models. That's where our technology plays a very pivotal role. I think mobility and the ability to get data from different sources is going to be a key and a driving factor for MSME credit assessment. And again, technology for MSME credit assessment has to be very agile because it's a very progressive market. Things change in a short period of time. So if you're working with a credit model that has been decided say 5 years back, it may not be relevant today. So iteration, ideation, and agility in credit assessment models is vital. Technology definitely enables all of this. The low-code, no-code approach with which you can create credit models, workflows, and business rule engines is a requirement that has to be looked at periodically, and you need to grow and improve every time you change your model. Do the A/B testing, understand what works, and then standardize what is working. I think lenders are domain experts. They know how to assess the borrowers. They understand the pulse. But to put it into technology and models, they need experts. So if you wish to talk about MSME lending and how we can further your goal of achieving scale in MSME lending, reach out to us. There is a link in the comments below. We'd be more than happy to ideate with you, get into a discussion that can help us both. We're very happy to do that. Thank you for watching this episode of Lending Insights by All Cloud, specifically on MSME and credit assessment. Thank you.